Welcome to TradeSpoon. My name is Vlad Karpel. I'm CEO and founder of TradeSpoon, and today we're going to have our weekly strategy roundtable discussion where we talk about interest rates, dollar, equity, right? Key support, resistance. Are we heading higher? Are we heading lower? What are the risks to the market? And review some of the recent trades and some of the tools we offer at TradeSpoon to help you navigate market uncertainty and build portfolio. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. This is my brief bio. I was Executive Vice President, Head of Technology at Options Express from its inception. My background, unlike other similar companies, is that my background is technology. I was a CTO of several publicly traded companies. We have a team of financial engineers that are constantly building new models. We invest a lot of money into infrastructure, artificial intelligence, neural networks to help find opportunities in the market. And then I trade these signals, not all of the signals, but I trade signals. I build a portfolio and several portfolios, and I trade them in the live trading room. Disclosures are very important. I'm going to go through some trade ideas. So please read the disclosures. Trading stock and options involve risk, not suitable for everyone. I'm not a financial advisor. I'm not registered with FINRA or CC. I'm showing you what I do in my own account based on my own risk tolerance level. For general education information purposes only, please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trades will be profitable or will equal past performance. All right. Before we jump into trading plan, right? Let's just talk about current market conditions. Spiders basically at all-time high, retesting all-time high, much stronger rebound than I anticipated going into the next week. I mean, it's losing some of its steam right now because of the inflation data, right? The expectation of inflation data again ticked up this morning. We had initial claims yesterday ticked up, you know, kind of at 8 months high. And we have a consumer sentiment that also came in pretty weak. And small business optimism, same thing, it's pretty weak. So today, let's see, today, consumer sentiment. So consumer sentiment came in very weak. I think it's under 70, 67, 68. So that came in very weak. And then the inflation, expectation of inflation data came in higher than expected. And as soon as that data came out, market reacted, right? Market reacted in terms of 10-year yield. Last time I checked, yeah, we're back to 450 level. So we're fluctuating in the past, well, in the past 6 days, we're trading right below 450, right? We broke above 450, market pulled back 5%. We dropped below 450, market recovered all of the losses. And I would say no new signal, right? The equity market correlated to bond market at historically highs, right? In the past 2-3 years, I think it's almost 80% correlation. So what the expectation of the bond market gets translated into expectation of the equity market. For now, 10-year yield is still in uptrend. We're heading basically into next week, CPI and PPI data, right? Tuesday PPI, Wednesday CPI data. I think two things will happen. You know, if inflation is hotter than expected, like today, you know, if the today was the consumer expectation, you know, or businesses expectation, consumer expectations of inflations. I think it's a consumer expectation of inflation. If that comes on higher, I think the yield will get back to this 470. Right, depending on the number, but probably in the upper channel. Back to the upper channel. If it comes in cooler than expected and CPI starts trending lower, right, whether it's shelter data or services data or energy prices, then we could drop potentially below 50 and 200-day moving average, and that would be a bullish signal. That would be a bullish signal. So now that earnings season kind of is behind us, right? Most of the S&P 500 companies already announced earnings. We do have next week retail numbers and retail companies announcing earnings. So retailers could be in play next week. I'm not sure how significant that is. Some people think it's significant. I'm not sure. I think the most significant event will be CPI data, and you can see retail numbers fighting for the 50-day moving average. So we'll see how it's going to react next week. Dollar, similar picture, right? It's above 50-day moving average, above 200-day moving average. It's above this uptrend. So I don't think it's a green light, right? It's still not green light, even though high yield also jumped. Well, it's kind of fighting for the 50-day moving average. I think it's slightly below that. So for now, I would just keep an eye. Obviously, small caps already started rolling over. Regional banks, ARK Innovation has been very weak, right? Continue to pull back. So I think for now, I would wait for the next week. There are two events, right? With the inflation data and then NVIDIA earnings, right? Last year when NVIDIA announced earnings, I was actually pretty bearish going into summer of last year, right? Not as bearish now, but right, this is the start of the AI kind of boom, right? NVIDIA announced earnings in May 23rd, and that just pulled all the boats, right? And we had a very strong rally, you know, almost into the August, right, of last year. So we are having similar setup right now, right? You could have NVIDIA kind of propel market to new highs and pushing it higher, as long as inflation is kind of within expectation. Or we could have a scenario kind of like in August, right, when it announced earnings, right? NVIDIA announced earnings. Initial reaction was higher, it rolled over, right? And then the pullback started NVIDIA, and it pulled the entire market, you know, into 10% correction into October. So I think those are the two scenarios, right? Which scenario is going to happen, I think it's hard to say, right? Without knowing what the NVIDIA earnings is and without CPI data, you don't really know for sure what's going to happen. My bias is to the downside because I think market is overbought, and reaction to the earnings this quarter is different than the reaction earnings were back in last April, May of 23. I think a lot of companies are, even though they have good earnings, like Google, right? Even though Google had a strong earnings, you can see it's, I mean, it made new highs, but it's weak, right? It's trading below the open print of earnings and continue to deteriorate. And Microsoft also had strong earnings, and it's, you know, underperforming. It's right now also fighting for the 50-day moving average. Some of the semiconductors like ARM, right, kind of gave weak guidance, right? And you had a sharp pullback in ARM. Same thing in Supermicro Computer. So I think where semiconductors are heading, that's where the market is heading. So personally, I think the risk is to the downside. But I would go through this exercise. We do this in the live trading room. I encourage you to participate in live trading room. We always go through this exercise, right? You basically can say, well, we're at all-time high, right? Or close to all-time high. There's two things can happen, right? We're heading to next leg up, maybe another 3-4%, 540, right? 540. Right, so we could go up 20 points, right? If NVIDIA is, you know, delivers very strong earnings, delivers strong guidance, and inflation ticks down, right? Then we're up 20 points, or we're down 20 points, right, to 500 level, or 500, 494. If CPI comes in harder than expected, and also we have, right now, we're very well positioned at 510 and 500 level in terms of open interest, right? Concentration of option puts. There's a lot of put buying at the 510 and 500 level. A lot of this data is going to roll over, right? Roll over in the next Friday, because we do have VIX expiration on Wednesday and then equity expiration on Friday. And last time spiders, this is when the spiders start dropping off, was right on that Friday, the expiration, right? Sharp pullback because repositioning, everybody's repositioning, and market internals were weak. So we could have similar setup now, right? That where we're down 20 points, up 20 points. So I would go through this exercise every day, right? To look at your positions, just so you can determine the size, right? Why the reason going through this exercise is very important, because you want to figure out the position size, right? I encourage you not to risk more than 2.5% of your account value per position. So on average, if you have $10,000, 2.5%, $250. So if you're bullish and you think we're going to 540, well, then how much do you invest? Do you put all of your money into this trade? Probably not, right? You probably want to make sure that this specific trade, you have only 2.5% exposure and you don't have more than 4 positions at a time. And personally, because of the uncertainty, right, we could have double top, right? We could have double top, or we could have this V-shaped recovery, right? I mean, we've had these scenarios, right, where you have, strong wave 3, 4, right, and then wave 5, right? If you're Elliott, following Elliott waves, you'll say, okay, this is wave 5, and we're just gonna break out and continue going higher, right? If you traditional charters, you might say, okay, no, we're gonna have a double top and roll over, right? I mean, both scenarios are possible. I think that will depend on the data. So how many of you think, one, we're heading higher, right? This is Elliott wave 5, we're heading higher because NVIDIA is gonna, Google and Microsoft said they're spending $10 billion, $20 billion a quarter buying NVIDIA chips, basically. Not all NVIDIA chips, but they're investing into infrastructure to support AI, to support inference engine. I use ChatGPT, and I mean, you can't even load it sometimes. There's just so many people are using it, and there's so much demand for this that NVIDIA could just blow off, have a similar earnings reaction than last year. Or scenario number 2, right? It's hard for NVIDIA to deliver quarter after quarter these 25%, 50% growth. At some point, because the bar is raised high, the expectations are so high, it's very hard to deliver what people expect, right? Then NVIDIA, I mean, I'm sure they are making money and probably will beat on the bottom line and the top line, but projections could be weak, just like ARM, just like Taiwan Semiconductors, supermicro computers. They're all into this AI setup, and it could be disappointing, right? So NCPI could be, we have 3 months inflation harder than expected. It could be, another month of harder than expected, and then the scenario 2. So how many of you say 1, we're heading higher? How many of you say 2, we're heading lower? Not a sell in main going away. All right, Joseph, I like that. I like that. So 2, but not sell in main go away. We do have, elections year, right? So usually kind of you have rally into the elections, then pull back right before the elections, and then another rally, So I think market is going to be volatile, especially as we get closer to the elections. But we still have, that's quite a way from you. Low 2 lower, sadly lower. All right, everybody said 2. Nobody said 1. Oh, okay, Andrei said 1. Okay, good. Andrei said 1. That's good. Well, I kind of already gave up my answer. I do think we're going to go to 2. And again, my main reasoning is so far earnings reaction, even though they beat the analyst estimate, but the reaction to these earnings has been weak, right? So I think the bias is to the downside. Plus, I think we have options exploration, which could cause volatility in the market, and NVIDIA, the bar is set very high, right? And so far, most of the AI companies are actually, the reaction was negative to their guidance. The reaction was negative to the guidance. So the bar is, that could, derail the earnings. But, people are rotating into the value stocks, right? Goldman Sachs, vertical move to the upside. So you do have rotation into the value stocks. So Goldman Sachs continues to go higher. Wells Fargo continues to go higher. General Electric, right? Industrials continue to go higher. Transportation, I think, been weak. Yeah, transportation actually has been weak. So again, not all green light, but utilities, right? Utilities, strongest sectors of 24 is utility. Right? Who would have thought that utilities are going to deliver such a strong returns? Again, this expectation that interest rates are going to go lower, utilities would not go higher if the inflation is going to be, So I mean, we'll see if this is elevator up, elevator down type of trade. All right, Genevieve, thank you. Laura, Andre, 1. Okay, so most people said 2. I said 2, 1. Okay. This is all nice and wonderful. What do we do with Tradesfund to help you navigate this uncertainty? Well, one is we have models. So I said my background is technology. We have a team of financial engineers building models and finding opportunities in the market. Stock forecast toolbox, you can enter any symbol, right? ETF stock, and you can find 10-day prediction. Right now, we have 8 or 9 days of higher highs and higher lows. The trend is bullish, right? Bulls are in control short term, bulls are in control long term, right? There's no question about that. And for today's support 520, overhead resistance 524. Most of the time, unless there is a big news like CPI data or big earnings like Nvidia, model is doing a good job telling you that at 520, as you're approaching 524, we were at 523. Then you consider selling. If you're approaching 520 like we are now and you're short-term aggressive trading, okay, then you might be, if you're doing day trading, then maybe that's the buy, right? That's the buy. So I would consider using stock forecast toolbox, right? If you're an active trader or even if you're a longer-term trader, just to find support resistance, right? For 10 days, it basically shows you that, well, model doesn't see that we're going to go below 520. We could get 535, right? So that's scenario number 1. Model basically shows you if the data does not change the equilibrium between bulls and bears, and basically comes in with an expectation. If Nvidia comes in with expectations, it doesn't have to be a home run. It's just within, expectations. And CPI is also doesn't have to tick significantly down as long as it meets the expectations. Then we could have scenario number 1 where we could be up 1%. And that's what model shows you. Obviously, it doesn't know the reaction to CPI data next week or Nvidia in the next 10 days. So you could have scenario number 2. You can switch to 6 months prediction and basically see that model says for the months of May, we are at 525, right? Today we're at 523, 525. I mean, you could, 530 at 534, the market is overbought, even based on the long-term trend. Based on the long-term trend, 534 it's overbought, 500 is your buy signal, right? So when the market was at 500 in May or 505, that's your buy for long-term trading. 530, if we're approaching 534, that's your sell, right? And trend is still uptrend. We're still trading in uptrend, but not as significant as before, right? You do see kind of deterioration in the momentum of the stock market. So that's stock forecast toolbox, right? We have company screeners, right? If you want to see which stocks are, which sectors are performing, computer software and services, semiconductors, energy have been strong, financial services have been strong. So you can find, sectors and drill into specific sectors to find, which stocks, could actually, have been in a strong uptrend. So that's stock forecast toolbox. I do like active trader, weekly trader, and monthly trader. So these are the signals generated by model, right? I review them on a daily basis. I go through the vetting process, right? Because model, doesn't look at interest rates, it doesn't look at CPI data, and then basically we publish the signals, right? So today, Amazon, right? Amazon has been a signal for several weeks going into the earnings and after the earnings. I've been trading Amazon using options. So Amazon, it shows you a buy, right? Short-term buy. If it reaches 188, we're getting close to 88, it's a buy, or yesterday's 189.50. Would be actually at 188. So you can use strategy A if you see if you see that pre-market, right? I mean, we didn't have pre-market, but if consumer sentiment is weak or weaker than expected and inflation is harder than expected, then you might want to wait for the open price, right? Wait for the predicted low. The model predicted low 188.30, which is exactly where it is now. Or you do previous close 189.50, right? So that's strategy A and strategy B. Short-term trading, I propose to look for 1% gain, right? 1% to 0.5%, especially when VIX is at 12, 13. It's very hard on liquid names to gain more than 0.5%, 1%, right? Maybe on meme stocks like AMC or on penny stocks, you can look for bigger percentage moves. But on liquid S&P 500 companies, 0.5% to 1% gain using stock options could be, 10 to 20% gain. That's your goal, right? And you can trade Amazon using stock. A lot of people like to leverage and use options. Okay, then same thing. You would use Amazon weekly options that expires this Friday and buy in the money call, right? Buy in the money call, Delta 70, Delta 80, 185 call. Here you're looking for bigger return. 1% underlying stock on the option could be 50% gain. So you just need to adjust based on your strategy. But the point is that these are not the signals that I don't trade all of these signals. I trade some of these signals. But some people that are active traders or have a well-written trading plan, then they can use these signals, right? For short-term trading would be active trader. For longer-term trading would be weekly trader. The only difference is a different model. And instead of looking 1% on active short-term, if you're a short-term trader, you're looking for 0.5%, 1% move in underlying stock. If you're, momentum trader, or if you hold a position for a couple of weeks, then you're looking for 2.5%. Right? If you're holding for a month, then okay, 5%. So it's a different models, and then as you go further out and you hold in position longer, then the idea is to reduce your position size. Any questions? And we always put important notes, right? Weekly trader, stock forecast toolbox. The short-term predictions might not align with longer-term prediction, right? A lot of people sometimes ask, seasonal chart shows one thing, and stock forecast toolbox shows the other. Well, they're analyzed different time intervals, right? Long-term, spiders, it's a bullish signal, but short-term it could be, lower, right? So it just depends. All right. Any questions on active trader, weekly trader, monthly trader? So those are models, signals, but you have to decide when to enter or if to enter these positions, right? If you're not sure how to manage your positions or when to enter, when to exit, then you probably want to start with Elite Service, right? Or any of the portfolios where you can follow my trades, right? Elite Circle, you basically have access to all of the positions and all of the orders that I make, right? So today I traded, what did I trade today? Mara, right? So I was trading butterflies, right? Mara is there's two approaches to trading, right? And there are two types of traders. There's one type of traders that are looking for these asymmetrical returns, right? They invest $1 and they want to make $10, right? And there's another type of traders that but the probability of success is very low, right? So one trick that most people don't realize is that in trading, if you want higher return on capital, which we all do, right? Everybody wants to invest $1 and make 10 overnight. So do I. But the only problem with that approach is that probability of success is lower, right? So when you see that, you have, like I do, 80% success rate, 90% success rate, well, that means that return on capital is smaller, right? Because probability of success is very high. You sell out of the money put spreads, or you buy, 0-day still expiration options, and you're looking for 10 cents move, 20% move. You can have these, type of trades where return on capital is small, but probability of success is high, or vice versa. So when you look for high return on capital, if you want to invest $1 and make $10, you're not going to be right 50% of the time, right? Because if you were, well, you probably wouldn't be on this webinar, or I wouldn't be on this webinar. But it's very hard, right? It's very hard to invest $1 and next day make $10 and be accurate 50% of the time. If you're really good, you may be 10 to 20%, hopefully 20 to 30% accurate, where you're growing your portfolio. But if you're only 10% accurate, and you invest $1 and make 10, then one unsuccessful trade and it will wipe out the 9 successful trades. So that's something to keep in mind as you're trading, right? You have to have understanding of probabilities of success, right? Trading is about probability of success. I use positioning, right? All of this, so let's say Mara, right? Let's look at the example of this earnings from Mara. The reason I chose butterfly, because again, positioning and the volatility, right? This is a popular stock. It's, tied to Bitcoin, right? And people really want to people wanted to trade it. So the question always becomes, first, do you want high probability of success, like low return on capital, or do you want low probability of success but higher return on capital? And sometimes, right, if 2 standard deviation move happens on only 3% of the time during certain market conditions or certain demand for puts and calls, that probability is elevated and much higher, right? So 2 standard deviation moves we've seen happen pretty often. This earnings, you see example of Starbucks, you see example of Disney, right? Meta, Netflix, they all moved 2 standard deviations. So Mara was no difference. You kind of can see that you have negative banner, right? Negative position. The highest was at 17 strike. 17 and 20 strike. So most people thought that we're either going to gravitate towards 17 or 20. Right now we're trading at 18. Let's see. All right, we're at 18. I mean, by end of the day, we could get, I guess, to 17. Just depends. It's a pretty volatile name. Spiders is rolling over. IWM rolling over. So we could get close to 17, right? So I decided to close it, right? At least recover some of my losses, right? But this is an example of a butterfly, right? Actually, I did want to do 18 put, but it was just, I didn't want to spend 10 cents. But anyway, but this is an example of where you have certain opinion, right? My opinion is that because of high demand for calls, people are buying calls, they're very bullish on Mara, and they're all selling short the stock, selling short the puts. This is an invitation for 2 standard deviation moves, right? When you have this high demand, right? Especially if you go out into, June expiration, there's a huge demand for the calls. Very few people buying any puts, right? So when nobody's buying puts and you have high demand for calls, based on market conditions, I mean, today is Friday, if this was Thursday, we probably could have got close to 17 level, right? On Marathon Digital Holding. So this is an example of a trade where I'm using butterflies. The cheapest way to put on a trade, one of the cheapest way, when you want to be long volatility. In this example, I wanted to be long volatility. One of the cheapest way is either condors or butterflies. Butterfly, disadvantage of butterfly is that this today was a perfect example. I selected 17, the middle strike 16, right, and the long 17, and we are at 1790. I mean, granted, it's a volatile stock. By end of the day, we could be at 17, but but I have to be right on this direction, right? And as long as it gravitates toward middle strike, then so that's butterfly, right? That's the maximum profit. right? If this is a profit, then this is the maximum profit, right? And these are the strike prices, right? The stock level. So this is butterfly, where you do buy one, sell two, buy one. If you it's hard to predict to which strike it's going to gravitate. I'm kind of using positioning, and sometimes it works, sometimes it doesn't. So if you're not as frugal as I am, then you use condors, right? Because you can construct a condor where you buy in one, sell in one, sell in one, and buy. And you can cast your net wider, right? And higher probability of success, smaller return on capital, right? Same thing. You would have to pay more, but you increase your probability of success. That's the advantage or disadvantage, right? So this would be a condor, right? But put condor or call condor. Some people do straddles and strangles, right? So it's the same thing. You have to be correct, right? If you're doing straddles or strangles, you have to be correct on the market, right? Because it has to go outside of these prices, right, for you to make profits. All right, so butterfly, or you could do debit spread, right? The next is debit spread, right? I could have put debit spread. Same thing, then much higher return on capital, but lower probability of success. Lower probability of success. So that would be some of the strategies when you want to be long volatility. If you want to be short volatility, then you do iron condors, right? You can do iron condors where you sell put spreads, sell call spreads on both sides. This is something that I also do quite often. So that's example of option trading and earnings. I trimmed silver position, right? Silver has been in strong uptrend, so it's not all option trading. A lot of people say, Vlad, you're trading options, and I like to trade stocks, so this doesn't work. I try to do example of both. So here's the example of silver. I trim my silver position. Silver is one of the outperformers, right? Kind of a strong move to the upside. Very volatile, right? 10% higher, 10% lower, but still in strong uptrend, right? As long as this trend is intact, right? We're still trading in a strong uptrend. So you have an example of stocks, options. I'm long Amazon. I'm trying to get out of the Amazon trade. Options, spreads, right? So combination of both. Directional trades, like Amazon is directional trade, or short-term trading like earnings or active trader. All right, any questions? Thoughts on MRK? So I'm long, full disclosure, I'm long Merck. It had good earnings, right? After the earnings, it did rally. It actually recovered some of the losses. It's above 50-day moving average. You do see kind of deterioration in momentum, right? We had kind of a vertical move up, and now it's mostly consolidation, right? Still above uptrend. I think it's kind of a classical, ascending triangle. At some point, I think Merck will break to the upside, whether it's now or maybe a next earnings season, that's hard to tell, right? But it looks like it wants to break higher, right? The path of least resistance is higher, but it could be false breakout. So model identified it in a strong uptrend. I like healthcare in general, right? Safety asset classes, Merck is outperforming, but it's above 50-day moving average. So definitely losing momentum, deteriorating in momentum, but I'm bullish on Merck. Still, and I'm still long Merck. Thank you, Joseph. Any other questions? So small caps, kind of giving up all the gains from yesterday, approaching 50-day moving average, and I think everybody's I would watch 450. Well, probably nothing's gonna happen till Tuesday. Well, we're already Friday. Monday is what's Monday? I think Monday we have Well, we do have several speakers today. So we have Goolsbee and Neil Kashkari. You know, the market is vulnerable, and they could react to their, to their opinion, right? Or rate hikes are still on the table, stuff like that. So that there could be reaction. So I would watch, their, what they have to say. And then it's all about NFIB optimism into, that has been poor, and then you have producer price index, and then actually Jerome Powell speak. So Tuesday, Wednesday next week, expect volatility. And one way to hedge, I still have QQQ put spread, right? So if you're not sure which direction the market goes, then out of the 4 position, QQQ is overbought, right? It's losing momentum. In the past 5 days, it didn't really go anywhere, right? So, it's going through consolidation before next move, right? So if you have, all your positions bullish, maybe this is a time to buy QQQ put spread. If you already have QQQ put spread, then you wait and see if it, what's actually going to happen to the stock. Bob present, BJ, have emerging market turn the corner. China has been very popular. I'm actually long China. I don't know why. I usually don't like it, but the price action is very strong, right? It doesn't matter about your opinion on the politics or how investable the asset class. It's been trading in a very strong downtrend. A lot of people, they called it in 23, right? In 23, they said it's going to be bullish market. It's kind of didn't work. Now everybody is bullish in 2024. But 3 weeks in a row above average volume, we're continuing to go in higher. Unless we roll over back below 24, the FXI does have a very strong uptrend, right? And emerging market, China is very, big part of emerging market. And EM kind of facing 23, 24 highs, right? So I would wait for EM in general. I would wait for a breakout, right? You want to break out of this long-term consolidation to confirm the breakout, like Goldman Sachs. I like Goldman Sachs because it's a long-term consolidation, right? And now you have a breakout, right? On above average volume, you continue to make new highs. So BJ, I mean, my answer is yes. I would be bullish on China. Let's see. So let's just go over some of any questions on Elite Circle. We went over seasonal chart, right? Seasonality. I mean, starting in May, May, June, toward July, you usually have some kind of a pullback, right? So maybe in July we could have a pullback, and then we're heading into elections, right? So this is probably, we're not going to have normal correlation, but at least as of right now, pretty weak correlation, right? Because we have a very strong move, much stronger than seasonality shows. So we do have seasonal chart, but we talked about stock forecast toolbox, talked about active weekly, monthly trade. Shadow trade is the service where you just follow my trades, but you don't have exposure to picks. Elite service, you have exposure to everything. Robo investor stocks only. Premium is these directional spread trades like Amazon. Questions, BJ thing. Wells Fargo, Bank of America, yes. So I think we mentioned Wells Fargo, Bank of America, they are breaking out. So you do have this rotation into the value stocks, right? Google is a superstar, but it's not breaking out. Wells Fargo, after the earnings, continues grinding higher. So let's see, home builders this week, no new signal, right? Home builders are flat, but strong recovery 3 weeks in a row, green candlestick, but no new signal this week. Metals and miners, strong recovery, 2024 high. We talked about China, another green candlestick. Industrials are very strong. They're already at all-time high, so industrials recovered all of their losses. Dollar, no new signal, right? It's kind of closing almost at the same level as last week. Junk bonds, impressive rebound, right? It did pull back to this support level around 92.50 and now trading high, but no new signal this week. No new signal. TLT, kind of the same thing, no new signal. Healthcare, I mean, say healthcare, nice rebound in healthcare this week. So strong move this week in healthcare. Consumer discretionary, no new signal. Retail, up higher this week. Transportation is flat. Telecommunication is up. How's my AT&T doing and Verizon? Yeah, AT&T is recovering. Verizon is underperforming. QQQ, another green candlestick close to all-time highs. Semiconductors, another green candlestick close to all-time highs. And today's spiders is flat. ARC continues to underperform. Regional down 0.5%. Small caps down 1%. So interest-sensitive sectors today are underperforming. All right, any other questions? And also I would keep an eye on Bitcoin, right? Bitcoin is a good proxy for risk on trade, right? And Bitcoin has been weak. I mean, no new signal, but still red candlestick and sitting on this key support 60,000. We briefly broke to that level last week. You know, if we dip below 60,000, I think that would put pressure on equity market. Usually there is some kind of a lag between the Bitcoin and equity market. Crude oil also has been weak. Again, pretty weak rebound. Crude oil is trading at that 80 level and briefly broke below that. All right, any other questions? All right, Andre, BJ, Bob, Chuck, Don, Ernest, Genevieve, welcome back. Ian, Joseph, Martin, Patrick, Tad, welcome back. Federer. You guys are awesome. Thank you for your time and participation. Means a lot to me. There is no closing bell today. There is no closing bell, Bob. I'm traveling. I will be back Monday. I will be back Monday morning. And there will be no closing bell on next week, no closing bell on Tuesday, Thursday, and Friday. Monday and Wednesday, regular schedule. So I do have to do a little bit of traveling this week and next. Ernest, good review of the week. Thank you, Ernest. Thank you for your email. I appreciate your questions. If you have questions about, some of you ask about this tool. It's an active platform that I'm using from Tradier. We do have a marketing relationship with them, Yellow Tunnel Hawk. So if you're interested in using this position tool or you're looking for another alternative on your broker dealer, then Yellow Tunnel Hawk. All right, guys, thank you very much. Have a great day, and I will see you shortly. Thank you. So not at the closing bell, but Monday morning. I'll see you guys Monday morning.